Let us help one of the guys in the squad.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I am the big fella. That is the Scruffy Trader. What I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit that little subscribe button. Genuinely helps. And if you find value, smash the like and the super thanks. Keeps the channel running. So what am I doing? Well, it's very simple. I'm going to be doing some trading.
No way.
Why? Well, that's what we do day in, day out. Do the same thing every day, rinse and repeat, and that's it. You know, there's big debates about trading. Everybody has an opinion. It's probably one of the most decisive industries there is.
Are you serious?
But really, it's not that difficult. You know, I come to market every day. Every day I show my skills. In, out, in, out, in, out. Why? Because I know what I'm doing and it's my job. And the other side of it is I follow a plan and I'm not looking to get rich. I am by no means rich, you know, but I earn a wage. That's what trading is. It's a job. And when I see all these clowns trying to sell things, and certainly when they go in for, they'll highlight percentage of account. They'll highlight risk reward. Why? It's a sales hook.
They've done studies, you know. 60% of the time, it works every time.
That doesn't make sense.
It's not the job. Remember that. Because if you're going to market, you should be pretty much sure what's happening on the point of you pressing that button. And if you're not, and you're sort of thinking, well, it's only a small stop loss for a big gain, because I see clowns sort of saying, oh, I only go 1 to 10 and 1 to 5. They're idiots.
You were literally too stupid to insult.
They're absolute idiots. And every single one of them that sort of sticks it into me and has a go never make money, ever. But I show my statements and I show you it in the moment. Who's wrong? Anyway, enough of the grumbles. Let's fire the screens up and we'll see. Sorry, well, no, I'm not sorry about it. Because I think it's something that needs hitting home. I love this job. I love my industry. But what I don't like is the morons that are in it. Because it makes it unpleasurable. And that's not the way the world should be. Everything should be pleasure, you know. Anyway, let's look at this. Why? Okay. Well, if we have a quick look, see what the guys are up to. Hey up, Pete's woke up. Hello, Pete. Diana. Little salute. Picked up on a message this morning that she's looking at Aussie JPY. Now, it's not on my radar, but I always feel duty bound to help. So I did a breakdown. Now, the breakdown was mapping it out and seeing roughly what the parameters of the trade are. And I'm now going to follow that up. Well, I follow it up all the time anyway. Let me just show you a second. Just whip that back. I put the strengths in on a morning. And the Aussie is there, the JPY is there, and it's come on in the market pick. Now that's followed up with biases running through. And 10 o'clock, which it's just clicked on now, is showing me that that is a buy here. It's kind of ready to start checking, and trade means it's imminent. There could be a good opportunity within this hour. Okay, so I'm quite happy to start looking at this. So what can I see? Where are we at with this? Well, it's quite a simple trade at this moment in time. Just flick this on. We can see it's pushing into a red zone, which means it's coming into a key level. If I'm looking at a Bollinger, I do like a Bollinger, by the way, guys, because it has a natural moving average running through it. And as we can see, it's holding above that moving average. It's come down from the outer side to test it and then shoot back up. And it's starting to curl around this side and flare at the top. This all adds weight to it moving to the upper side. So we'll just get rid of that for a second. So what else can we see? Well, let's just drop this back a bit. Well, you can see it's had a colossal move to the downside. It's pushed up, come back to where it was, held this level, and now pushing up. And that big tail attracts me. Why is that? Well, that's the 8 o'clock candle. So it's been running a couple of hours and all of the pressure is up constantly. Now, if it broke the tops of these, it'll try and revisit new areas. And those new areas is this, this, and this. Okay. So let's move back to the hour. You see what's happening. Well, there is an entry point marked into the chart. See, it carries on with that. So down here, and then a move up over. Might get our sort of pips out of it. Now, what we've got to remember is we're in the London session, and this is Aussie JPY. They're on the other side of the world, so it's pretty quiet on a morning. However, I want to help. So what I'm going to do is I'm just going to put a small target in, maybe 5-10 pips. That's all I need, and see if we can drag it out. Now, let's have a look, see what the ATR has to say on this. Well, the ATR, let's go out to the daily, is 94. So say 90, just round it down. Okay. Well, if I third that, that gives me 30. And then if I third it again to catch the waves, that'll give me 10. So my target's about right, to be honest. It's coming down on the green. So all I'm going to do is I'm just going to watch it. And then I'm going to try and get a trade up over. I'm not swinging for the fences. I've already done okay this morning already. I'll just pull this across. I've got a gold trade running. Currently it's not lighting the world on fire, but it does have profit in it. But I've already had the profit out of it. So if I get another 50 quid out of this, I'll be quite happy with that as well. So where are we at? 34. It's going green. There's 40 quid. 35. Is it? Isn't it? Tell you what, if that hits 40, I'll close this out. Just a second. Yeah, close that out. Okay, so that's closed off. It was pretty close to that level, which I'm quite happy with. I'll just let the RSI relax a little bit, and then I might go back into this a bit later. But that's pulled 176 this morning, and there you go. It's my sort of netting account that you can see. So I'm quite happy with that as well. So this morning is proving quite good. Right, let me run this trade, and we'll get, let's say I've got 175 on that side. I need 25 quid, and then I've got me 200 for the day, because it doesn't bother me where it comes from. Okay. I'll just run it out and I'll come back to you at the end. Okay, guys, stopped out. How good is that? Well, we're about to find out. But first thing we need
is a coffee.
Well done, my girl. I like her. She can come again. Right. What's happening right now? As you can see, I had this zoned out and marked where I believed the value areas were and where I believe the stall points were. You know, it's all about marking and trading your charts, what you see. Well, you saw me enter. I did have some madness points in case it went against me a little bit, because it often does, and you need to be prepared for that. And if it does, get yourself a better price. So that's what that was. However, it ran straight for me. Now, this is a question that some people ask all the time. Well, what if it just runs? You know, I mean, you should have had your full position on. Well, no, because it's process over money all the time. And until you understand that, you're not going to make any money. Proof in the pudding. But if it is running for me, let it run. And let it run to a stall point. Well, where did it stall? Bang on that zone that I marked in. So zones, levels, if you know how to work them, this job becomes very, very easy. And 125 quid when I wanted 25, right? So what's all that about? Why is that sort of, well, you'd have been happy with 25, but you got 125. It's all about benchmarks, guys. You know, I'm never ever setting myself up to fall. That's what I was driving at the beginning of this video about risk rewards and all of that. To me, it's all horseshit. You know, I've got no time for it. I think all you're doing is you're going to force a trade. You're falling into the hype of the sales, and basically you're not trading. Trading is about being paid. And you see me do it every day. Now, there are certain criteria that I look for. Of course they are. There are certain rules that I follow. Of course they are. But they are common sense rules. In other words, I know what my pain threshold is. How much I'm willing to put into the market to invest. And I know how much I want out of it. The moment you start going down the route of, well, I'm risking 1 unit to get 10. Well, it has 10 times more chance of hitting your stop than it does hitting the target. So you're already on the back foot. Start at 1-to-1. And if you start at 1-to-1 and then start working the edge slightly in your favor, over time, you'll make money. And a rule of thumb that I always work to is, if you're less than 51% win rate, you're gambling. It's that simple. You know, your win rate needs to be 51 plus, because at least then you understand what you're looking at and the edge is in your favor. The higher that number, the better. And why is that? Because it means you're starting to read the charts and understand the charts. And then it comes down to the old human emotion. Well, what if it goes wrong? Well, then it goes wrong. Have the common sense to pull the plug. And if you can't pull the plug, then that's something else you have to go down. Case in point, I'll just flick this back. There you go. That was timed pretty much pip. And if I pull up my sort of goal that you're watching, I have been working this as well. It's finished at 205 days done, and again the stall points were bang on. So what I'm driving at, guys, is you've got to put your homework into place before you trade. And if you can't, and you're just doing it blind, this indicator and that indicator are there and off we go, well, you'll be going down the wrong road. Because what you got to remember is, as traders, we all different. And all successful traders have the same trade. We might be on different roads, but we are going to the same destination. But we know where we're going. That's the difference. In other words, we pre-plan it. The retail trader that loses doesn't pre-plan it. They open the laptop, they go, I'm here, give me a trade, I want a trade, and then just go willy-nilly at it thinking it's get rich quicks because they've seen, well, the land of make-believe, or what you call Instagram.
How did that gobshite get on the television?
Anyway, story for another day. I've had a long night, guys. I've had a long night. I'm going to go have a shower, pull myself around a bit, because I've now got the rest of the day to myself. It's only 11 o'clock. So as always, guys, trade well, keep your risk managed, but above all, do what you love. The money will follow. See you all in the next one.